Let's get back to the discussion we were having with Endurance Tech. The company posted a very weak set of Q3 earnings. It was largely the European business that was hit by lower car registrations and higher energy prices. Ramesh Gehaney, who's the Executive Director and COO at Endurance Technologies, joins us now. Ramesh, hi, good morning. I hope you can hear me now. I was just, informing our viewers about how you have a, very good ear to the ground as far as the auto sector is concerned. Tell us what's happening in Europe. Energy prices are escalating, semiconductor shortage continues. Is there any respite in these issues at all, or do you think it could get worse before it gets better?
Good morning, Sonia. Now I can hear you very well. See, as far as Europe is concerned, the only problem that they're facing right now is, or primarily the main problem they're facing is the energy prices, and which are not being truly compensated by the OEM because they are equally affected by the same issue, and that's why it affects your margins and as far as the volumes are concerned, semiconductor continues to be an issue where the allocations, although may have increased, but the numbers are not increasing. And including the new car registrations, which are also putting down, 23% was Q3. And I see that even in January, it's 6% down so far. So the challenges are there. They are struggling with the numbers. But looking forward means going forward, I'm pretty sure, I'm pretty confident that things will improve.
Mr. Gehaney, hi, good morning. So January also you're down 6%. Similar trend for February so far as well?
No, the new car registrations are down by 6%, not Endurance is down by 6%.
Right. No, new car registration. I'm saying that in February as well. What is the picture?
I don't have the February numbers because we are still running through the month.
Okay. Sir, just talking a little bit about the margins, because it's been, 6 quarters now that the margins have been falling, and there's a big fall, right? I mean, even in the quarter gone by, you hit about 11%. 6 quarters ago, you were at 17-18%. I understand that energy costs have gone up, but are you doing anything at your end to bring down costs? And what could be the ballpark range of margins in FY23?
That's a very good question, right? I'll not give you any forward-looking statement, but I'll tell you how the sequence, works like. The auto industry has been, running through a series of challenges, right? Like something like COVID-1, COVID-2, then we had this, energy prices going up, then we had container shortages, and then we had supply chain issues, and then we had semiconductors, and it's a multiple of things happening in series. Now with the semiconductors, I believe that the vehicles, the high-end vehicles are not being made because shortage of semiconductors, although the allocations have improved. Like even in the case of Endurance, we are seeing that the numbers will increase in the coming month as well as in the coming months, where we'll be getting better supplies of the better supplies of the ECUs that we procure from our suppliers. So this will definitely increase. But the demand is so much, as the electrification moves up, the semiconductor supplies will keep on coming under pressure, and as such, they're working on full capacity. So there will be a challenge in getting the capacities and the supply chain balancing out to the requirements which are moving upwards. But having said that, the auto industry is moving on a continuous, challenge. And so would be Endurance. We can't be comparing Q3 alone to Q3 of the previous 2 quarters, because there are some change points. Like in Q1 and Q2, we had, the PSI incentives and the commodity, which are not there in Q3, because we've already consumed the PSI incentive in the first 2 quarters. And as far as the commodity price increase are concerned, you can imagine that, if 40% is, or 40 to 50% is increase on aluminium, and around close to 30% is increase on steel, which is a large part of our manufacturing requirement. So if that increases, you don't get any value addition to these increases. So optically, you find that the margins are compressed, but honestly, if you look into the value terms, right, we are not as much under pressure as
got that point. No, got that point, Mr. Gehaney. In fact, that was my follow-up question. All of these supply side issues are fine, but at some point, is this hurting demand as well? Because if it becomes both demand and supply side issue, then there's a problem.
Yeah, it is affecting the demand, because see, if the supplies are not or the consumption patterns are not improving, then obviously the inventory levels get consumed at the stock points, and if you're not getting inputs, the OEMs will not be able to produce vehicles. Now, as you may see in certain cases, some of the OEMs are not performing as they were expected to, which affects those plants of ours which are dedicatedly set up for those customers. So a combination of many things hits your performance. But I must tell you that Endurance is completely focused on what we are supposed to do. We have booked up new orders. Even in Europe, we've got 53 million euros worth of order, out of which around 40 million is for hybrid and electrification products. Similarly, in the case of India, we have started backward integration and other things. So all the actions that we have in place are actually keeping our fundamentals and our structure, basically the business model well intact. And I've got no hesitation in saying that we've got every lever engaged to ensure that we move into the right direction, and things will surely improve in the coming weeks, in the coming months.
Okay, things may improve in the coming months, but sometimes it's just beyond your control, right? I mean, we were speaking to the management of Bajaj Auto a couple of days ago, and they said that in the month of January, motorcycle registrations have gone down 17%, and this is on top of the weakness we've seen in the preceding few months. You get 80% of your business, domestic business, from the two-wheeler market, and there is a lot of pressure because of higher ownership costs. How bad do you think things could get in FY23 in the domestic business?
Well, that's anybody's guess right now, because it would all depend that how much of the OEMs recover back on the volumes and how much is the demand increase. But what I understand from the OEMs, that the pent-up demand is moving upwards, because as such the shortages are happening. So we can see a sharp up move as we had seen in the previous year, where the pent-up demand was so much that the peaks of the volumes happened. Similar would be probably the case now once the semiconductors and other issues are balanced out. And let's not forget, all the industry is facing, the industry will recalibrate itself, and so would Endurance. Although we have taken action strong enough to move forward, I don't see any loss over there. But soon the water will find its balance. Means recalibration will happen across all of things.
Sure. Mr. Gehaney, one last question. Is the EV opportunity overstated, or do you think this is actually an exponential growth area for you?
Good question, Anuj. It's not a question of being overstated. It's a question that how much are people waiting for the EV to happen, and the fuel prices going up. Would the change be happening instant, or would the change be happening in a steep correction towards the EV? That is still a question to be answered. Because even the EV players, I would say that the best of configuration may not be on the road right now. With all the players, they would be finding, what I would say that even the EV, the vehicle itself has to evolve. There will be many changes on its way. So while we progress forwards, there will be dynamic changes on the EV evolution also. So the change point is expected, but not as soon as we look forward to it. Yes, the hype is there, and probably everybody's waiting for EV vehicles.
Mr. Gehaney, just very briefly, between the troubles that you are facing with the two-wheeler slowdown here in India and what's happening in Europe and everything else that you described, by when, in market parlance, when should we expect a bottom for as far as all the troubles go? I mean, everything in a way priced in, and when do we start to see things improve broadly? I mean, not asking you to specify this quarter or the next quarter, but what's your sense? Will it happen this year?
I think it's already started. If you look, okay, what are the challenges that the industry face? One is semiconductors, so the allocations are improving, so things are getting better over there. The commodity prices are softening down. If not, aluminum, definitely steel is seeing a better way. The increase in air freights and ocean freights are coming down. You can see some respite over there. So things are reconstructing itself. The odds that you had seen in the previous quarters are reconstructing itself. Recalibration is happening. I would say that process has already started. I wouldn't say that it will happen in 2 or 3 quarters from now, but the process has already started.
All right, let's hope that starts to show up in the stock price as well. Down 20% Endurance this year so far, and I mean, the stock has taken a